Hey traders, today we're diving deep into a topic that has been an absolute game changer for me when you move your stop to break even. This simple strategy has saved me countless losses and helped me boost my win rate. Now I know it's not a popular concept and you might have heard the classic advice to keep your emotions out of trading and just let your trades play out. But what if I told you there's a systematic way that you can do it, one that keeps your emotions out of the picture and potentially saves you thousands of dollars? Grab a pen and paper and let's get into it. Let's talk about the 3 ways you can incorporate break-evens into your model. First scenario is simple. Move your stop to break even when you're taking partial profits. If you're taking partial profits to lock in gains as a trade unfolds, it doesn't make sense to leave your stop loss below break even. So folks, I want to take a second here and we're going to be going over a live example. Today is November 5th and I'm on a paper account, but this is live price action where we're going to take a trade and we're going to show you exactly what I mean in regards to moving your stop to break even when you're taking profits. So I'm waiting for this candle to close above this fair value gap. If it closes above this fair value gap, or what we call inversion fair value gap, in the next 23 seconds, we're going to be looking at taking profit, our initial profit at these highs, and seeing if we can see a push higher. I think we're going to front run this a little bit, as in taking this position before it actually closes, because I think we're going to push pretty quickly up to that level. Okay, we're going to take this position with 19 seconds left. Our initial profit area is going to be at these swing highs, these relatively equal highs. We're going to take 3 off and then we're going to move our stop loss down here. But once we hit this level, that is when we're going to want to move our stop to break even, which is part of my inversion strategy. Final TP I would potentially be about right here. And the main reason here is we have this breaker level right here, and I think we potentially could see some more price movement lower. As part of the break-even strategy is once you take your first take profit, we're going to want to move our stop to break even to protect ourselves in case it wants to aggressively move the other direction, which is a real possibility because we could be on the sell side of the curve of the market maker model. So there is our first TP. Now we're going to move our stop loss to break even, just above break even, to cover our commissions. That's what we want to cover. And then we look at this swing high as our potential area of taking profit, which is overlapping with this area, which what I call is a breaker. So this is our breaker. All right, let's see how price reacts. See if we actually can get up there. It may fail because it may want to move lower, just sweeping liquidity and wanting to run the other direction. Either way, our position is protected since we've taken profit. When this key level's hit, it may want to run the other direction and stop me out, that's okay. There it is right there. And I've now protected my position, not losing any funds and protecting myself against reversals after we sweep these key levels. So the logic is straightforward. If you're going to pay yourself, you should also be protecting yourself. As soon as you take your first partial profit, move your stop to break even. This way, you're not risking any of your initial investment while allowing the trade to continue with less stress. The second way is to use break even when price hits a key level, something that could trigger a significant retracement or reversal. This is also normally when I'm taking my first profit. These key levels could be swing highs, swing lows, equal highs, or equal lows. These areas often act as turning points in the market, and it's wise to move your stop to break even when price interacts with them. It's all about minimizing the risk while allowing the trade to potentially continue in your favor if it breaks through. Hey folks, here's another example that I want to give you in regards to moving your stop to break even at key levels. So I'm currently in a position, this is a paper account, but that is currently live price action. It is 2:18 p.m. and that is New York time. Now, I took this short based on 2 reasons. We had an inversion model here, a sweep of liquidity, and a run into this breaker where we have this low right here. So I have a breaker and an inversion overlapping with each other to tell me that price may want to start running lower. Now, when I'm looking at key levels where price could actually reverse from, this is the most obvious level that price could reverse from. Why? I look at this as low resistance liquidity. That if it's going to run this swing low, it should run this swing low and hopefully target this one as well. We're looking for price to run this level, and when we hit this level, we want to move our stop to break even to protect our position, to make sure we're not taking unnecessary losses, because after price runs a swing low, the algorithm has permission to look the opposite direction for inefficiencies and liquidity. The only reason it will continue lower is if it has algorithmic instructions to continue lower, running these lower levels that also have inefficiencies, for example over here, and a swing low which has buy stops underneath here. So as price moves lower, as we can see it happening right now, we will want to take profit at these key levels on top of moving our stop to break even. Because if we know there is a chance that price could reverse at a key level, why wouldn't we take profit? We want to protect the progress that we've made, so we move our stop to break even so nothing goes negative and it has no chance of actually hurting us in the long run. So now we just swept this low right here. Why don't we go ahead and take a partial profit right there on that last push? Let's see if we can get it. Okay, we're going to take one profit right there. We took one partial profit at this swing low. We'll take two more at this swing low. And because we have this low resistance liquidity, but they're also swing lows, and as we can see right here, there should be no reason price should run the other way. This is why we move our stops to break even. And I'm going to go ahead and move that to break even now for two reasons. Number one, I took profit. I took a partial profit. And number two, we ran some swing lows here, here, and here. Today is election day. It's November 5th. And price has more of a tendency to run in a high resistance manner. It doesn't run quickly and smoothly in one way. It's going to be more choppy. And when you have more choppy price action, when you hit these swing lows, these are many times key levels that you're going to want to make sure you're protecting yourself, because price can just run the other way, grabbing these swing highs up here. But I'm optimistic that price is going to push through these levels, this level right here, and we can protect our position by even moving our stop a little bit lower, because really we have this order block right here as well. We should not be reaching above this order block unless we're really changing directions. Okay, there is our partial profit taken again. Now there's no reason why we shouldn't run for this level, and it's the main reason why we move our stop at these key levels, because there's opportunities that price could actually reverse. So let's go ahead and move our stop to the mean threshold of this order block. If we get up to this point, we can probably reasonably expect it's going to run our stop loss. So we might as well stop out in profit instead of going all the way back to break even. Let's see how this plays out. Okay, there we are, stopped out in profit, protecting our position. Now let's just see if price is going to come all the way back up here to where our break even was, just to see if we were correct in our assessment. We ran through the mean threshold of this order block and our position was right there. Okay, it would have been tagged at break even. So as you can see, guys, when you're hitting those key levels, make sure you're moving your stop to break even. The third approach is a bit more advanced. This one requires experience and screen time because it's more subjective than the other two. There will be times when you've seen the market move in certain ways dozens of times, but suddenly it feels off. Maybe price is moving slower, or it just doesn't have the same punch, or maybe we're in high resistant market. This is when you need to trust your instincts. If the trade feels lethargic or isn't behaving as expected, it's okay to move your stop to break even to protect yourself. You need to remember that trading is as much of an art as a science. Experience allows you to recognize subtle shifts in market behavior. For example, when I'm seeing low resistance liquidity, I know that I can confidently keep my stop loss in an area because price is going to move aggressively in my favor. In high resistant markets, it is very common for a lot of back and forth price action that can hit your stop loss. This is very, very important to make sure you're protecting yourself when you're not seeing price move the way you're expecting it to move. Now, I know this is going to hit home with a lot of you because we've all been there. Your stop gets hit, and then the trade takes off in your direction without you. What's the natural reaction? We chase it. We overtrade, and suddenly we're in unnecessary losses because of it. But here's the thing. There will always be another setup. The market isn't going anywhere. The best traders are the ones who know how to protect their profits and not get caught up with the emotional roller coaster that can happen when price runs without you. There is a lot more on trading psychology, things happening behind the scenes that many traders don't even realize. Lucky for you, I've done another video that dives deep into this topic. You can check that out right here. Thanks for watching, guys. We'll see you in the next one.